Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today is Thursday, April 18th, 2024. I did not find any notable headlines or economic data that came out today. We had initial jobless claims, which were not all super eventful or very interesting. Moving through some charts, it's almost Friday, and the three black crows, the opposite of the three white soldiers, as a commenter recently just pointed out, instead of red, they're black. Depending on the type of chart you're looking at, a white day is up and a black day is down. And so, three white soldiers are three black crows. So I do expect this to close around here. Gareth Soloway, a great seance chart reader, had noted that there's a lot of options interest and options expiry tomorrow at the 5,000 level. And institutions, the ones that are selling these options contracts, if they can get it to close right at 5,000 tomorrow, then they make the most amount of money because they sold options contracts, which are gambling chips that the market's going to go way up or way down. All these people buy these chips and they're like right at 5,000, and that's the house. They control markets. They have enough capital to do that, and they typically win. That could help explain what's going on with the VIX. I've been talking about it going up and up and up and looking like it's going to keep going up, and we're settling down as a little bit of fear. I mean, this gauge is based on the options contracts themselves, and so it's almost like it has to settle before we see what happens next. Can it continue to spike up? Can it fall over? Nobody knows. Nobody knows, but we can make some educated guesses. So beyond those three black crows, we already had sort of our three black crows in HYT, tracking high yield corporate. Again, this fund represents, I'm a little company, so I have to pay a lot to borrow money. And if investors don't want to risk money, then I have to pay even more to borrow money. And when the value of this fund goes down, I have to pay more to borrow money, meaning that investors are worried about these little companies that have to pay so much more money. Are they going to be able to continue paying their money? And this had recently really made a big crack, and we have a little bounce here. It looks to me like it wants to roll over past what also looks to me like a three black crows scenario. So things look still very bearish from a longer term perspective, not just day to day. What I mean by this is, like, this isn't just like tomorrow and the next day it could keep going down. This is like the three black crows. This is like we're going down now kind of a thing. Adding to support this view, the Fear and Greed Index on CNN.com, we're at 34, squarely in fear. I wanted to bring up another fear and greed index that I had found. That I check this every day just to see what it's doing, because it's a strategy. It's an automatic strategy. Basically, when things get fearful enough for long enough, this thing starts moving into cash. And this fund has been. It's not an actual fund. It's a strategy, all right? So this has been at 0% cash for a long time, and finally, boom, it's just another one of those things that's like, yes, the fear is really here, and it's sticking a little bit. This thing recently just moved into 5% cash, and I want to just share this a little bit. So if you go to this website, and it goes back to 2008 and shows this blue here is how much cash that this fund would hold at any given moment. And it has actually underperformed the buy and hold strategy since after the great financial crisis. But if you look at from before the great financial crisis and several years after it, to me that was really the last true larger bigger business cycle. And so if you're like me and are expecting something like this to happen, a recession of some kind, this strategy appears to outperform in those environments. If you have a secular bull market where things just keep going up and up and up, and this thing keeps going into cash every once in a while, of course it's not going to beat the S&P 500. It's a little hard to see, but when you look at this chart here starting in 2008, you can see, or beginning of end of 2006 actually, through the great financial crisis and afterwards, the S&P 500 with cash indeed had a lower drawdown and outperformed all the way up until about 2011, and then about equally through 2012, and then from there we start to split apart more and more. The 2020 recession was really just a shock. It wasn't, this technique also doesn't do well with, such a sudden collapse in markets that's just so fast, because it's too fast for this thing to get to get into cash fast enough. But, this is just another thing for me to pay attention to, as far as, strategies go. I've been hearing, by the way, also about the AI traders, the automatic traders, and how they're set up. And from my understanding, they are in sell mode right now, and they're trying to draw in people to buy the dip, and then they keep selling it down and making money on the way down as well. Notably, SMH Semiconductor ETF had broken a good amount lower today. I do see this continuing to fall here. Also in QQQ, an ETF following the NASDAQ, also dropped a good amount today. So where's the bounce? How big will the bounce be? Longer term, I am still bearish, but not bearish enough to continue my short. I said in previous videos I was short the NASDAQ and short semiconductors, and I'm now out of those positions. I was lucky enough to get a 25% gain in the semiconductor short and a 11% gain in the NASDAQ short. I don't want to continue this short just because, I don't like shorting for the most part unless there's a more very glaring opportunity. And part of my hesitance is just that we don't have massive bankruptcies yet. We don't have massive layoffs. We are not seeing headlines coming out that nobody can find a job and the world is collapsing, and it hasn't happened yet. Is it going to happen soon? Yeah, I think so. Am I going to bet my money on it? I mean, what's wrong with cash? What's wrong with treasury bonds? The yield curve is inverted, and I had someone comment recently about, the prospect of investing in longer duration treasury bonds, and I want to mention that, right now the 30-year treasury bond yields about 4.8%. And the front end of the curve, the Fed funds the Fed funds rate, the maximum is 5.5. It's a target of 5.25 to 5.5%. And so from the max rate, that's only three cuts, 325 basis point cuts to the 30-year yield. And once they cut, they usually keep cutting and the whole curve goes with it and people run into safety. It's important to know that the yield curve is inverted, and that's not a normal, healthy situation for markets. If you let the government borrow your money, when you're buying a treasury, you're letting the government borrow your money. Now, usually, if you buy something and say, hey, you can hold on to this for a longer period of time, you need usually to have a higher yearly return because they're going to have it for a longer period of time. You don't know what's going to happen in the future, and so you demand a higher yield. Now, that's been inverted. So now, if you let the government borrow money just for a month, you get paid more than what you get when you let the government borrow your money for the next 30 years. Well, why is that? It's because the market is pricing in a recession. It's pricing in an economic slowdown. It's saying, okay, yeah, I can get that higher rate of return on these short treasury bills, but I don't believe that that's going to last very long. And I believe it's going to actually go down far below what I'm getting right now for the longer duration bonds. Now, can the bond market be wrong? Can long duration treasuries be wrong? And can we have the front end of the curve stay where it is and the back end rise up above it? It's possible, and it's never happened before. And I mean, that's all there is to it. It's possible, and it's never happened. The way the yield curve uninverts always is when the front end of the curve drops down. So the Fed makes these cuts that you've been hearing about, perhaps happening, maybe not happening for a longer period of time. Doesn't matter. Once it starts, it typically will keep going that direction. And so, that combined with the stock market overvaluation, gold, going way up, everybody's a crypto millionaire. We're not in safe times right now. And for every reason in the world, I see treasury bonds as a very safe and good place for my own capital. I currently now have about 45% of my portfolio in treasury bonds. ZROZ is the fund. It's slightly longer duration than TLT. So you get a little bit more leverage when the long end of the curve interest rates go down. It's the most hated thing. It's the most ignored. It's the most unloved and hated asset class out there right now. And so I love it. I'm eating that up. If anything, I'm going to probably wish that I had more in there right now. The only thing stopping me is the fact that cash is still giving a full, in a money market account, you don't get that 5.5% return. You usually will end up with a 4.5% return, which is also great. It just sits there in cash. It doesn't gain or lose value. You just keep getting those monthly payments, and it's wonderful. So yes, to share, I've shared this before. This is my own pie chart of my own holdings. I'm now 29.7% cash, 44.5% bonds. So that gambling hedge was like, it had grown to a pretty largish size, and now it's back down like 8-9% or something like that from 7%, and now it's back down to 2%. That other 2% is actually a leveraged BRZU. It's a leveraged Brazilian fund because it's just another unloved area where I think that there's a lot more value there than what the markets are pricing in, and so it's fine. 2% of my portfolio can sit in there. I'm happy with it. And 8.5% in what I consider to be value. And if we break these down a little bit more, Brazil 8.3%. Uranium, I still have 0.8% in the juniors in case uranium goes to the moon. I get to, have my little piece of that pie. And that's fun. I have almost 10% in China, another very unloved place of the market with very undervalued assets, in my opinion. And I don't, this is probably my least favorite position right now is ARK because, in these conditions, I expect ARK to lose significant value. But, you know, let's say I'm wrong. Well, hey, I diversified. Maybe it'll outperform everything over the next year. Who knows? It's not like I'm the guy with the crystal ball. I've been increasing in my subscriber count recently. Thank you for all the subscribers and all the likes and all the comments. Any comments are good. Even dislikes are good. Anything is great. I don't mind having the channel expand. It'd be it's again, like, I do this largely to like think through my own thoughts, but if it can help other people, that's great too. I wanted to uh, talk about one particular comment. Uh, you know, this is someone that mentioned that the NASDAQ is up 100% since late 2019. If all you did was stay long through the COVID crash and inflation crash, you'd be up 100% or 20% a year. Good luck listening to Gareth. Well, yeah, I mean, look, everybody has their own, like, who they are, what they're doing, you know? And, I just gotta say, like, what kind of investor are you? What do you want to be? Are you a day trader? Is that what you want to do? Do you have a technique that works 90% of the time, you lose 10% of the time, but you win enough to actually, like, make good money? If that works, that's great. You know, Gareth has been around a while studying charts, and I I believe in his methodology, and I do, these patterns that he's always talking about, they're probability based, and they're, for me, they're just a way of helping me get through my investing journey. Whether you like them or not. Overall, though, I consider myself to be a student of Benjamin Graham. The teacher, the greatest teacher that we have, really. Warren Buffett, Michael Burry, and many, many other very successful investors swear by his methodology, and I do too, and they make sense. Before I even read the Benjamin Graham book, I felt like I was Benjamin. I had Benjamin Graham's mentality. He even talks about in there, you know, why would you pay more? He doesn't say stick a gum, but why would you pay more for a stick of gum with, like, the right wrapper on it versus another stick of gum that gets the job done? I've lived that. That's been my whole life. I have a Chinese Xiaomi phone. Um, I like finding value in unloved things, and that's what that's all about. I mostly, overall, that's what I'm aiming for. I'm aiming for looking for things that are unloved, that are ignored, that are clearly undervalued, things that are pumping out loads of cash, and everybody's like, nah, I don't want that. I want Bitcoin. Like, I digress. Hope you enjoyed the show. Thank you for watching. Robschild.